mode.
Hello, everyone, and welcome to today's webinar, Five C's of Cash Management. This is a presentation of Cash Flow Engineering. My name is Scott Stroud. I'm one of the partners here at Cash Flow Engineering, and I will be moderating today. Our presenter is my partner and co-founder of Cash Flow Engineering, Jeff Prager. Jeff, if you haven't been on a webinar with us and don't know us by now, Jeff is a retired CPA. He's been a CEO and CFO of numerous businesses, most businesses that he started from scratch and owned himself, including Strauss Homes, which went from zero to $26 million company. They're in Denver. Gateway American Properties, a property development company that went from zero to $150 million. And Jeff was a founding partner of Ashworth Golf Clothing, a company that today is publicly owned. Jeff's the author of three books: The Peddler's Son, Financial Forecasting in Excel, and Managing Your Business with Seven Key Numbers, which was for me. I see many of you on the line are from the building industry. That's published by the National Association of Home Builders, Builder Books, and was the number one seller in 2015 and number three in 2016. Jeff has been an adjunct professor of economics at the University of Denver and is our presenter today. Jeff, I'll let you start with our mission.
Great. Thanks, Scott. I always try to repeat what we're in business to do on every webinar, but our mission is basically follows the rule that running a business is a learned skill. And I had to learn it, and I think a lot of us, we have a talent that brings us into business. We have an entrepreneurial seizure, as declared in E-Myth by Michael Gerber, and we start our own businesses, and we find out that running a business is a whole different skill set from owning a business, from learning a skill. And you have to learn it just like you learned your skill. So our goal is to help you, the business owner, be more successful by teaching you to use simple tools that drive consistent, predictable, and sustainable cash flow in any economy. What we like to say is we like to simplify business and optimize cash flow. That's our mission. As you all know, small business is the backbone of America, and most of the business community is mired down in misinformation, misunderstanding, and misleading lies that cost us a lot of money. And we're going to be addressing some of those misleading myths, if you will, during the course of this webinar. But we found that when you focus on the right numbers, and that's the key, is you've got to start focusing on numbers, the right activities, the right objectives with the right systems in places, your business not only can succeed, it will succeed. So my question to you is, are you doing the right things to drive your business and cash flow forward? So we're going to talk about a variety of things today, but basically we're going to end up talking about the 5 C's of cash flow management. And let me give you an overview in the short time we have together about what it's all about. But my question to you is, what is the number one objective of a business owner? Now, whether you go through Forbes or anything like that, you'll find out that almost every business periodical says that driving consistent, predictable, and sustainable cash flow is your number one objective as an owner of a business. Now, we want to go one step further. We want you to view every dollar you spend in your business as an investment. For instance, if you paid out $1 and knew you'd get a return of $1.25, wouldn't you spend every dollar you have on your own business? And by the way, that begs the question, do you look at your business as an investment? And is your investment paying off? Now, when you're investing in your business, there are three major areas: marketing and sales, operations and your organization, and financial management. And you need to be able to execute and track all three in order to maximize your return on investment. And when these systems are working together as an integrated system, again, integrating all the parts of your business, not just the silo here and there, then you're able to generate the cash flow you need to drive a viable and sustainable business. So think about this. Where are you in terms of cash flow? Where are you on a scale of 1 to 10? Are you hitting a home run, or are you away from that? Now, we said there are three major areas of a business, and we've come to conclude that for every area that's weak, you're probably losing money. So let's say on operations and sales, operations and organizations, you gave yourself a 10. That would equate to $33,000 of profit. Sales and marketing, you gave yourself a 10. And on financial management, you gave yourself a 10. Well, you're not losing any money. You're running your business perfectly. And the key is that you need to have the experience in all three facets of running your business. Now, what's the cost of not having a 10? Well, suppose in finance you're a 5, okay? How much are you losing? You're losing 1/2 of the $33,000 or $16,000. Every point that you don't rate yourself a 10 is costing you $3,333 per $100,000 of profit. Now, look what happens if you're not strong in any of them, like you're getting an 8, and a 5. You're probably losing $46,000 of profit. And again, that's $3,000 for every point you're losing. So, how much additional sales do you need to generate to make up for that lost profit? Again, you've got to generate enough sales to have a gross margin of $3,000 per sale. According to Forbes, the number one reason companies fail is because they run out of cash. Okay, that's easy to say, but what are the underlying reasons when we start digging down? Well, there are basically 5. You're not in touch with your customers don't know what you offer, there's no real market differentiation. Why would they use you if they could use somebody else? And the failure to communicate the value proposition, which means you're competing on price, and that's the worst way to compete. The fourth way you're losing money is a leadership breakdown. As you get bigger and bigger, your business gets more and more complex. And if you have poor planning, poor capitalization, which means money there when you need it, you have a lack of business skills and a lack of financial education, you're probably losing money. And if you don't have a defined profitable business model, the bigger you get, the more money you lose. You need a predictable income stream, a predictable cash flow stream, and a predictable profit stream. So cash is the name of the game. You need cash to pay yourself more, pay employees and vendors, invest in marketing and sales, and reinvest in your business. Now, we've showed this many, many times, the difference between cash flow and financial statements. We as business owners think in terms of cash inflow and outflow. In other words, cash comes in from your product sales, from borrowing money, or from equity contributions or sales of stock or partnership interest in your business. It goes out for operations, which is cost of goods sold, overhead, salaries. Also, it goes out for asset purchases and to pay dividends or debt. And until the money coming in is greater than the money going out, there's nothing left for you. Now, the way an accountant looks at it is there's that dotted line right in the middle. Everything to the left of the dotted line represents what's on your income statement. So it has some cash receipts and some of your expenditures. But your debt and equity contribution, your asset purchases, those all show up on the balance sheet. So financial statements are misleading to us as business owners because the most common question I hear is, why doesn't my profit show up in the bank? Well, that's because profit is an accounting convention. It's a fiction, all right, versus cash flow. Now, getting to our 5Cs, the simplest cash flow management system can be done on the back of a napkin. What you do is you start with your beginning cash balance, you look at your receipts, then you look at where you're spending money and other disbursements like loan payments. And one of the things that I try to teach my clients is moving money to a segregated profit and tax account. That way you can ensure that you'll have money to grow when you need it. This is, if you get nothing else out of this seminar, something as simple as this, just monitoring your cash flow in and your cash flow out will help you manage your business better. Remember, whatever you measure will add to your profitability. That gets me to the next point, which is measuring. All right? A lot of businesses, they have their bookkeepers do the measuring, but they're not looking at their numbers. But when you start focusing on your numbers, you will see dramatic changes in your profitability and cash flow. And why is that? It's because you're focused, you're paying attention. Like, for instance, we're going to talk about our 7 numbers later, but if you focus on lead generation and you start measuring how many leads you're generating, the more you focus on it, the more you're going to start making better decisions of what's working, what's not working, and how much is it costing me per lead. Again, our business is an investment. It's an investment of our time, energy, and money. And in order to maximize the return on your investment, you have to measure where you are. And basically, it doesn't take more than 3rd grade math, addition, subtraction, multiplication, and division. Now, I know I teach more sophisticated math at the university, but honestly, in my whole career, I've never used anything other than 3rd grade math. In fact, you all know I'm a retired CPA. Do you know what CPA stands for? It means can't possibly add. If you even take away my calculator, I'm not sure that I could do the 3rd grade math needed to do my job. The other thing you need to do is be able to point your thumbs. Now, here's something your accountant won't tell you. A number in and of itself has no value. You need to compare it to another number. And once you do, then you know whether or not it's good or bad. So, for instance, if I said I made 50 grand this year after my salary, is that good or bad? The answer should be, I don't know. All right? But if I said my goal was $10,000 and I made 50, that's a thumbs up. But if my goal was $1 million and I made 50, that's a thumbs down. And that really is the essence of management, is pointing your thumbs. But you can't do that without measuring the right numbers. It's a process. If you learn this process, you're painting by numbers. And I used to manage at my peak back in 2005 and 4, 156 companies. Not only manage, I owned them. I was an owner in all of them. And I could do it in under 10 hours a week. I could teach at the university and do my research for teaching and still work less than a 40-hour week. So let's get into the 5 C's of cash flow management. They're very, very simple, and you could use them for any form of management, not just financial management. But 1 is create expectations. 2 is collect data. 3 is compile it into reports that are easy to understand. 4 is compare the numbers that you wanted with the actual numbers, point your thumbs up or down, and if you have to, correct. We'll go through each of these in a little more detail. Again, create benchmarks to measure your progress, collect meaningful information, compile it into formats that are easy to understand, compare your results, correct your path, and then repeat. And each cycle hones and polishes your business. We use the 5C methods in all 4 areas of cash flow management. Okay? And there are 4 ways we do it. We look at our overall company direction through our 7 numbers. We develop a 90-day cash flow statement, and that's a little bit more sophisticated than the original statement I showed you, but not much. you develop your yearly budget, and then you develop your long-term projections. This is where we use our numbers. 4 areas, 7 numbers, 90-day cash flow, our yearly budget, and our long-term projections. Those are the key areas of financial management. So let's talk about our first C, which is create. We're going to create benchmarks to measure our progress. And again, they're not always numbers. And again, we're trying to create a dashboard, something that you can monitor easily to see if you're running your business correctly or not. Where do you begin? Well, we create our expectations through a business plan and related budgets that support the business plan. And a business plan is based on historical data, the economic environment, the demographics, and customer research. That's how we come up with our business plan. Now, a lot of people think this takes a lot of work, but we're not offering this today, but we're going to have a business planning training session where at the end of it, within 4 to 8 hours, we're going to have a business plan that works for you. That's our commitment to simplicity. And it's not as hard as it seems, but the benefit is you're going to see your vital information, you're going to identify areas of potential opportunities and savings, it's going to help you identify potential cash needs, it's going to help in the process of making decisions on timing and the use of funds. Now, this is a very important point, that timing and the way you make decisions will generate your cash flow and determine whether you'll have excess cash flow or you're going to be scrambling for money. So this is the key. Now, a very famous quote is, "Those who do not learn from history are doomed to repeat it." So before we start doing any planning, we want to look at where we've been. And so we just do a little bit of fact finding. And honestly, because I've done it so many times, could do this in less than 30 minutes if you give me the right information. But I go to your tax returns, and I look at your revenues, and I look at your revenue growth. And then I look at your cost of goods sold and see what's happening there. And I look at your payroll, your sales and marketing. Remember the 3 keys: payroll, sales and marketing, and operational expenses. And I look at those, and I look at your net income. Now, going back to my previous quote, hold on. For some reason, my computer isn't reacting. There we go. Going back to my previous quote, "Those who don't learn from history are doomed to repeat it." Well, look at what's going on in this business. We're losing money. We're making a little bit of money. We're making a little bit of money. We're breaking even. Is that really a return on your investment? 0.05%? 0.5% or a half of 1%, minus 1. Would you consider that a good return on your money? And yet most businesses will run with this kind of, without this kind of knowledge. Now, where do you get the numbers? Well, we could show you where you get them off your 1120S or your internal financial statements, whatever. But they're easy to find. And I'm not going to go through that now. But it's not just numbers that we're going to need. We're going to need the right numbers. So we look at our historical data and we ask ourselves, is your company, where's your company in terms of quantitative meaning being able to measure performance? What's been your rate of growth over the past 3 to 4 years in revenues, gross profit, and net income? Now, the reason this is important is if you look at our example, revenues have been growing. Gross profits have actually been growing, but net income has been declining. So we need to look at all 3 in order to figure out what's working and what's not. We need to look and see whether our key products or services what our key products and services are doing in terms of market share. And if you're growing, how fast? And if you're growing, are you winning or losing? You could grow your way into bankruptcy. Matter of fact, most businesses who survive 2 or 3 years actually will end up growing so fast that they bankrupt themselves. That's a bigger problem once you've been successful than losing market share. So now that we've looked at our history, we say, you know what? I don't like where I've been. So I'm going to shoot for 75% cost of goods sold and a 5% return on my investment. And that determines how much money we have for expenses, which then determines, based on our payroll and marketing costs, how much we have for overhead. Yellow is our input. Black is everything that's calculated. Then we shoot in our projection of 800,000, and notice everything calculates automatically. And we could see that in order to hit our goal, we're going to need to spend only 600,000 on cost of goods sold, 100,000 on salaries, 24,000 on sale and marketing, and 36,000 on overhead. That's what we have to do to hit our profit goal. Again, this is a very vital lesson for you, is work backwards. Figure out how much you want to make and figure out what's left for expenses. Okay? Now, what we're going to do with that information is we're going to drive it into our budget. And notice that we're hitting our 800,000, our 600,000. Now, we look at our detail under payroll and other, and we see that we've got a cushion of $12,200 in this category. In terms of marketing, we have a cushion of $15,000 in order to spend our $24,000. In our overhead, in order to spend our $36,000, we calculate, and these are calculations, and this spreadsheet is available to you, and we could calculate how much we're over and under budget. And we could look at where our profit is. Okay? So this is one of the keys to understanding and budgeting. Okay, we're still creating our expectations, but a lot of people make budgeting much harder than it really is. Now, if you're a multi-divisional company, or if you're a bigger company, you may want to do this for each of your divisions or departments. You can do that and have them aggregate into one great big pool. But the point is that no matter how complex your organization, it always comes down to something like this. And I've dealt with billion-dollar companies in my career. And as you know, I've been a CPA, and I started my career with Touche Ross. And a lot of you may not have even hear about that. It finally merged with Deloitte, and it's one of the biggest 4 companies in the world for accounting. So that's where I cut my teeth. A problem's a problem until you reduce it to a procedure. So where I'm going with that last comment is, once you learn how to do these tools, which are not that hard, honestly, they are not that hard. The problem is you got to go through a learning curve, and a lot of people don't want to go through that. But you do it once, and it may be difficult. You do it a second time, it gets easier, and literally by the third time, it makes sense, and you're able to analyze your own numbers. But a problem's a problem until you reduce it to a procedure. If you want to increase your cash flow, develop the systems that are going to make you win. Now, we need to test whether or not our goals are achievable. So what we normally do is we look at our 7 numbers. We look at our number of leads. How many leads are you generating per month and per year? We look at our sales conversion rate. This is a percentage. Of those leads we generate, how many of them actually turn into paying customers? We look at how many repeat customers we have. Now, for different industries, that has a different meaning and a different time frame. For instance, if you're selling hamburgers, it may be once a month or once a week that your customers come back. If you're selling houses, when I had my Strauss Homes, we actually found that a certain demographic we could go back to every 3 years, and we would upsell a certain percentage of them to a bigger home. All right? It just depends on your time horizon, your number of transactions per customer. Again, not only do you want to keep them coming back, but you want to increase the amount of times they do come back. So think about it if you're a retailer or almost any business, a car dealership. They increase their number of transactions per customer by offering service. Your average price per transaction. How much do you actually make per transaction? And in a slide or two, I'm going to show you how to come up with some of these numbers. What are your variable costs? Again, I want it to be a percentage because we use that as a key to monitoring our cost. Fixed cost, this is a dollar figure, okay? What's it cost you for rent, leases, salaries? What is it all, how much is it, and are you within your $36,000 or whatever the number may be? 36,000, 360,000, 3,600,000, 36 million. This formula works on any size company. And then we put it into our 7-number worksheets. We look at, we could do it from backwards or forwards. We could start with cash. We want to generate $30,000. Our fixed costs are $120,000. Our variable costs are 75%, means we have to have a revenue goal of $600,000. Then we can look at our average price per transaction, our number of transactions per customer, and then figure out how many customers we need, and then ultimately figure out how many retained customers and how many leads we have to generate. The bottom line is, if you're creating and monitoring benchmarks over time, that's going to lead to consistent and predictable cash flow. The second C is collect meaningful information, and that includes both financial and non-financial measurements. We need to track this data to track the progress of our business. Again, the financial data is not just accounting reports, but your estimates, your job costs, your exception reports, your variance reports. That's all financial data that you have to monitor. Non-financial data may be the number of sales, sales per salesperson, revenue per employee, traffic counts, and customer profiles. These are things you want to monitor. But where do you get the numbers from? Well, the accounting system is basically, you're either buying something and you're recording who you're spending the money with, where you're categorizing that. That makes step 3, compile the information, easier because it's summarizing it into useful categories and how much. That is the most minimum of information you need. The vendor, where do you summarize it, and how much does it cost you? And basically, you could run your business with that little information if you needed to. Now, a lot of you have more sophisticated systems for monitoring job costing and variance reporting, and yes, but you could do it even through here. And by just adding a few more lines of data, you could start churning and burning your data in a whole lot of different ways. Conversely, if you're not buying something, you may be selling something. Again, the customer name, the category of revenue that it is, and the amount. Again, the most basic of information. If you're using job cost systems or project tracking, we have other ways of tracking those numbers. Again, but this is the most basic information. Accounting is nothing more than that. I've been a CPA for over 45 years. I know it's much more complicated to input the data, but the concept is as simple as that. And again, we're after simplicity as business owners. If you don't know your average sales price, count your invoices for 6 months or a year and divide by the number of invoices. That's your average sales price. And if you don't know the number of transactions per customer, you take the average number of invoices and divide that by the number of unique customers making up the total number of invoices. It is that simple, and your bookkeepers can do it. Now, we have a thing where we could track, and again, we've done it so it's very, very simple. We could track the leads we generate and where they're coming from and how many are turning to proposals and closed deals. And you could find that sales tracker with videos about how to run it at cashflowengineering.com/sales tracker. The third C is compile your data into formats that are easy to understand, interpret, and act upon. And again, you're not just measuring financial information, you're measuring how you utilize your time, your quality, your cost, your marketing, whatever. But there are 3 basic financial reports: the balance sheet, the income statement, and the cash flow statement. The cash flow statement tells us where the money comes from and where it goes. I'm not going to spend a lot of time on this, basically because it's way beyond what we're trying to do, but let me just give you the basics. The assets are basically current assets, that which is expected to convert to cash within 1 year or less. Your fixed assets, which are your building, your land, your equipment, and your intangible assets, which are things you cannot touch like goodwill, patents, and things of that nature. Your current liabilities are payments that are due. Unfortunately, under most circumstances, your liabilities are due faster than your current assets can be collected and converted into cash, which brings up a cash flow problem. All right, then there are non-current liabilities and your equity. The income statement is basically sales minus cost of goods sold, less selling expenses, administrative expenses, and that's really all there is to it. But we haven't learned anything yet, and this is where most people stop. Matter of fact, I will say that the majority of my time with my clients, once we get them organized and running smoothly, is spent going over with the owners and the accounting department what their books look like and what the story is that is being shown to them. In other words, how do you interpret the numbers? The fourth C is compare your results to your benchmarks or your actual numbers to what your estimated numbers were going to be. And this is where we're going to point our thumbs up or thumbs down. This is what you as a business owner have to pay attention to, is what's important. What are my numbers telling me? So if we look at that fictitious company we had, we started with 800 leads and we wanted a $30,000 profit. But when we looked at their actual numbers, we saw that they were down in their leads, down in their average price per transaction, and up in their variable cost, which means they were on a trajectory to lose $50,000. My question to you, we thought we were going to make $30,000. We look at the actual numbers and we're losing 50. Thumbs up or thumbs down? Basically, thumbs down. And where's that $50,000 going to come from? Well, one of 3 places: the owner's pocket, which is the second worst place, or not paying your vendors, which ultimately will lead to the third place, bankruptcy. So that's what we want to correct when we get to the 5th C. But basically, when I ran my companies, I would look at my job profitability reports, my 7-number reports, and my cash flow reports. And if things were going well, thumbs up. And if things were going bad, then I had to pull my feet off my desk and start figuring out how to correct it. Again, this is all I use to manage. And by the way, I want to reiterate, A couple of my businesses made the top 100 businesses here in Colorado. And Strauss Homes, we were the 19th largest overall builder in Colorado, and we were the second largest privately owned builder in Colorado. These are not things to sneeze at. Is that we built these businesses from zero to multi-millions. And by the way, just so you all know, I got rid of them, liquidated them, or sold them before the crash because we were able to see that. That's the subject of another webinar, which is how to plan for economic cycles. But here we are on our fifth C. How do we correct where we're going? Well, we need to address variances in budgets or plans and look at the differences in what was expected versus what actually happened. So in terms of financial management, we probably need to adjust our expenses, raise our margins, which really means raising prices, revise our projections, or modify our estimates if necessary so that we can correct where we're going. Now, we talked about the 7 numbers. Remember, originally I said there are 3 main areas to invest in: marketing and sales, operations, and organization and finance. Well, we've come up with a system that we found works in every business, in every industry. Not only every industry, but for nonprofits as well, associations. It works everywhere. We look at what you're offering, what the purpose of the company is, what's your product, how do you promote it, what's your price, what's your place. And we use those to adjust our numbers that we don't like. Or we look at our operations, our production, our people, we look at our financial management. Now, I'm not saying bookkeeping. I want to make a big distinction between this. It is not your obligation as an owner to understand debits and credits. It is your obligation to understand the numbers and what makes your business tick. Now, with our company, if you recall, they were going to lose $50,000. But what if we could change the conversion rate from 25% to 35%, and the average price per transaction from $500 to $750. So we isolate, based on that matrix I showed you, the levers that we're going to use, or the strategies we're going to use to change our numbers. And by the way, I set some goals here. I said we're going to increase our conversion rate from 25% to 35%. That's quantifiable. And we're going to increase our average price per transaction from $500 to $750. This tells me how I'm going to do it. I'm going to increase the conversion rate by letting Art handle all the sales. We're going to create a customer qualifying sheet so he doesn't waste a lot of his time. And we're going to train the people that answer their phone in proper phone technique and how to qualify that customer. We're going to increase our price by sending smaller jobs to our competitors, better time management, better qualifying, and better sales scripts. Now, again, here's where we are. We're going to increase this by 10%, from 25% to 35%. Now, that wasn't a big change, we found out. And this is where the 7 numbers comes in really handy, is that it can focus you on what's the most important thing to change first. Because you can't change everything overnight, or you may not have the resources to change everything overnight. So we found, okay, that improves by $20,000. It wasn't enough. We're still on a bad trajectory. But by changing it from 500 to 750, and that actually had to do with our qualifying, we stopped the hemorrhaging and actually created a cash cushion. Now, this cash cushion can be used to generate more leads, or get our variable costs back to where they belong, or actually, think about this, increasing your overhead. Why would you increase overhead? Well, salaries is the #1 cost in overhead. And the number one person whose salary you should be paying is your own. So if you're not making enough money, why not put it in your budget and get an organization that allows you to pay yourself what you're truly worth? So this is the way the 7 numbers works. It helps you develop strategies to make sure that you're meeting your financial goals, because if you don't generate the right sales volume, you certainly will not meet your budgetary goals. So this is a real important concept. So our summary is you need a solid idea of where you're going and how you're going to get there. Financial management entails not only the collection and presentation of information, but the knowledge to interpret and act on the data. This 5-part system, the 5 C's of financial management, will enable you to build the company that you envision. But remember, profit, growth, and cash flow don't happen by accident. I can't stress this enough. It takes planning for you to get where you're going. It takes discipline. It takes commitment and a strong will to succeed, along with being well positioned and having good systems. So this slide alone is a key to success. If you could do these 5 things, you will be successful. So now what? The 7 numbers can help you drive consistent and predictable cash flow, but only if you put them to work for you. And we challenge you to improve your cash flow over the next 90 days and implement what we're trying to teach you here. You need to decide which way you want to go. Do you want to take a trial and error path and pull out your hair and hope that you're going to be successful? Or do you want to start learning our simple step-by-step methods where you are given a recipe to improve your performance and conquer your cash flow? Are you ready to take your next step? And will you commit to yourself? In other words, will you invest in yourself? And we have offered a 90-day cash flow challenge. And here's what it includes. It includes 4 hours that will cover 90 days to a healthier cash flow. We're going to show you 90 days is 13 weeks. We're going to give you the templates we've been showing you here. The template for budgeting, the template for a 7-day, your 7 numbers, and a template for budgeting your cash flow or monitoring your cash flow over the next 90 days. And we're going to give you a lot of tips. I think there's over 200 tips that we give you on how to generate more cash flow immediately. We're going to give you these Excel spreadsheets and show you how to work it. And then we're going to have open forums where we discuss your challenges for the balance of the 90 days once you enroll. Here's what you'll be able to do. You're going to be able to visualize your results. You're going to be able to see what you're doing and what it's like to start with the end in mind. We're going to help you implement a strategy that we call the Wall Street strategy. Most businesses work under the Main Street strategy. Conventional accounting teaches you how to operate on Main Street accounting. But there's a huge difference between the way Wall Street works and the way we work. And it's all legal, it's all right in front of us, but it's a paradigm shift in how you look at your numbers. And you will, and we guarantee this, see measurable improvement in your cash flow within 90 days. On top of that, we're going to give you the manual so that you could do it for yourself. In other words, you're going to get this manual, which we're updating right now again, and you're going to be able to use it as an adjunct to the webinars that we're going to give. By the way, those webinars are going to be recorded, and you're going to have access to them forever. And then, as a bonus for being a part of this, we're going to give you 20% off any other programs we do for the next 12 months. Access to recordings of the seminars and the group sessions are bonuses included in this offer. So what does it cost? Well, if you were to come to Denver and do it live, you've got to pay thousands of dollars. Think about this: airfare, hotels, food, and if you miss the seminar, if you miss it, then there's no way to get access to it. This webinar provides an easy access, cheaper way for us to teach you how to develop better cash flow in 90 days. What's the cost? It's $498 per person, okay? But because you're on this webinar, if you sign up in the next 48 hours, we're going to give you a $200 discount, and it's going to be $298. So you're going to get all this: the live webinars, the questions and answers, the unlimited access to all the recordings, the group sessions where we cover your 7 numbers and your strategies, and your cash flow implementation. So we're going to help you. We're going to help you and guide you through the whole process so that you will never feel abandoned as you go along. So again, you can enroll in this process. It's at cashflowengineering.com/90days/, and we'll have the program available for you. So I want to thank you for coming, and we have a few minutes left. And Scott, I wonder if we're getting any questions out there, and or do the people know how to ask questions?
We didn't go over that at the beginning, but most of these people have been on our webinars before, and I recognize some of the names like Don and Leanne and Bubba there. But yeah, if you want to ask a question, there in the right side of your screen, you should see the GoToWebinar control panel. It's probably been in your way this whole time, but there it is on the right side of the screen. And one of the tabs that you'll see says questions. If you open that, and toward the bottom, there's an area where you can type in your questions. We'll see those questions, and I'll convey those to Jeff if he's not watching, and we'll get you an answer right away. Um, uh, Jeff, yeah, one of the questions that's come in, it says you went over these very quickly, and it looks like a lot of number crunching. How do I find these numbers to begin with in my business?
Well, the numbers are very easy to find. All you have to do is look at your prior tax returns, and we'll show you which lines to look at and which ones to add so that you could create the fundamentals within minutes. And I mean that literally. Everything I do is about being simple. And if you can't do it, we're here to help you, believe it or not. The second thing is your budgets are basically, I mean, it's this simple. We look at last year, we look at where you're going in terms of revenue, and we ask the simple question: what's going to make this year any different than last year? Mm-hmm. And we have revised our numbers based on that. And then the cash flow part of this, the 90-day cash flow, I haven't shown you any of those spreadsheets other than the most simple one. But we can work with you and show you how you can figure out whether or not you're on your path, because, again, we have it automatically comparing. And then you put your actual numbers into the spreadsheets, which your bookkeeper should do, and the comparison happens automatically. I wrote the spreadsheet so that the formulas are very complex, but it makes it very easy for you to run these calculations.
Okay, good. Kathy says
it's real simple.
Yeah. She said, "Thank you. That answered the question." And Karen asked this: the spreadsheets that you're talking about, these worksheets that you have, such as the ones that you showed during the presentation here, they're all included in this 90-day course that we're taking.
Not only do you get the spreadsheets, but that book that we showed you will show you how to insert your numbers. So we're going to be working with you. You're going to be coming to the webinars, and you're going to have an instruction book. That 5C Management is an instruction book, but it goes well beyond some of the topics that we're discussing in the 4-hour webinars.
Okay. And if we need help with that one-on-one help, is that included as part of the program?
Yes, absolutely. And you could see right now I'm even giving you my access direct line to me and my direct email.
Yeah.
So it's not info at Cashflow Engineering. It's my name, J.K. Prager.
In fact, should you wish to take advantage of this special offer and on the 90-day cash flow challenge, you get 2 calls. One early on to help you get all these numbers and to answer any questions that you have and get lined up with them. And then a second call at the end. This is one-on-one, not a group call where you're on with everybody else. This is just you and either Jeff or myself or another cash flow engineer that will help you um, find out how to make those corrections or see which corrections or which numbers, which strategies would work best to give you the most immediate and the most long-term improvement in your cash flow. So 2 group calls, yeah, we'll be doing these forums together where you can ask questions in a group, but one-on-one where you don't have to worry about anybody else hearing, or if you're bashful and you don't like to share in a group setting. These are just you and an expert that'll help you with your numbers there. When does the program begin?
I think we're going to start it in 2 weeks
Okay.
on a Thursday.
Okay, so we generally do them on Thursdays. And by the way, you should know that we've got a number of groups already in ongoing. We started one in January and another one in February. And so we've already got these groups going, and we're learning from some of the questions that they're asking. But this will be our 3rd group, then we'll be getting started here in March.
This is our 3rd webinar group. We've been
Yeah.
doing this for years with our clients in live sessions.
Yes, absolutely. And that page again is the 90-day cash flow challenge. It currently says, if you're visiting that page right now, Cashflow Engineering / 90 days, it still says $498 because that's what we were doing it for in previously. But give me just a moment, or go ahead and we'll have that corrected, and you'll be able to engage us and get this 13-week program for just $298. I think that's all the questions that we have. Jeff, excellent presentation. You covered a lot of ground and you covered it quickly. So thank you for that. We urge you to join us and join the to take action, to take control of your business and your cash flow. You came onto this webinar for a reason today, and hopefully you got some of the questions answered, but we would certainly like to work with you to help you get a meaningful change and improvement in your own cash flow and profitability in your company. So please join us. I'm Scott Stroud. Jeff, thanks again for your presentation today, and we look forward, everyone, to having you join us on the 90-day cash flow challenge. Thank you.
Thanks.